Test, test, test. Hello, 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 hello. Hi all and welcome to another edition of Midday Market Review, live trading, key trading levels and trading setups for popular markets. We're going to go and do this very quickly. My name is Phil and I'll be your presenter today. For those of you who haven't seen this before, if you're looking for a community, check out my TraderCast. If you're looking for some education, if you're confused with what I'm saying here today and you need a little bit more clarification, check out my trading skills, mytradingskills.com. Some of our courses are completely free. Check them out, see how we teach, and if you like what we do. A little bit about myself. Over the past 10 years, I had the privilege of speaking in front of various different industry events, and I taught many people how to trade. This brings me to a disclaimer. Anything that I say here today are my opinions and experiences only, although I'll be showing you some live trades, or we'll be talking about some live trades. This is not advice. Basically what I'm trying to do here is I'm trying to provide people who came from my trading skills, from our courses, with a practical application of what I firmly believe a novice trader should be able to do. So very simple price action trading, no complicated trading strategies, no indicators, just simple price action trend following, and that's basically what it is. This brings me to a current open position segment. I have nothing open at the moment, nothing in relation to today's broadcast. I have some other positions open which have been open from the swing point of view, but we talked about them on Friday, if you remember. If you watched previous broadcast, which was Friday. Today's Monday, 13th of June. If you watched the previous one, you would see some levels that were broken and the reasons why I've decided to enter them. But they're not today's trades, so therefore we're going to leave them as they are. If I do anything and add any positions, I'll be happy to talk to you about them and add them to the list. Okay, so what I'll do is I'll just make sure that this is all streaming okay, and then I will today's trades. Oh, okay. So therefore we're gonna. There we go. Just gonna say hi all. Welcome. Okay, cool. From the economic data point of view for this week, I've posted something in the community already. There is the week ahead. There's a week ahead talking about the important key economic data releases. The biggest one for me is going to be Federal Reserve on Wednesday. Today we have very little from the economic data point of view, so we'll be talking about mostly technical trading setups. There is one which is nearly setting up in FTSE. I'll talk to you about that. As for a swing trade, we have UK unemployment rate and German inflation tomorrow. ZEW economic sentiment survey. If anybody who's trading euro dollar, euro currency crosses, or the DAX index, European equities, they should be paying attention to that. The big thing on the economic calendar is going to be Federal Reserve interest rate decision, press economic projections, and statement, press conference. So that's all happening on Wednesday. The market sold off because that was the reaction to higher than expected consumer price index figures in US, i.e. inflation in US, which was showing 8.6%. So market spooked, sell off. Now the forecast is, or the projections are, that Federal Reserve will likely carry on with the rate hikes, and that is causing US dollar to firm up, which is visible here. Euro dollar lower, sterling dollar lower. Now we're seeing a little bit of a pressure here in gold as well. I'll talk to you about some key levels in gold. And that'll all be triggered even more by a Federal Reserve rate decision and a press conference on Wednesday. Moving on, we have Bank of England interest rate decision on Thursday, summary of the business conditions and monetary policy summary. So if you're trading UK equities and also sterling currency crosses, that's the big one to watch. And the week will finish on Friday with Bank of Japan interest rate decision. So if you're trading Japanese yen currency crosses, and that's pretty much it for this, which could be very volatile and fairly busy week. Okay, from the briefing, is there anything else worth? US bonds flag recession risk with a 75 basis point rate hike in play. Sterling at 1 month low due to falling GDP and post-Brexit tensions. That's basically the summary. UK economy shrinks unexpectedly as COVID-19 testing winds down. US dollar drives higher, yen lower, sterling at 1 month low. Crude oil prices fall on Beijing COVID-19 warning and inflation concerns. But crude oil, we talked about this on Friday, it's coming to a very nice level. I'll talk to you about all of this in a minute. I was looking for a pullback. Let's see if that pullback carries on, and it could be a buying opportunity for crude oil as well. So that's where I am. Oh, and the last thing is Bitcoin. Crypto markets value slumps under 1 trillion. Bitcoin below 25,000. Bitcoin below 25,000. That was the last thing. Let me just actually see where are we now with cryptocurrency. 23,500 and a bit, or 23,600. That's a big spread of about almost 80 points, or 13.8% drop on a day. 13.8. 13.8. Ethereum almost 18% down. Litecoin almost 16% down on a day. You know, so most of the other, like Neo, 23.6% down on the day. So cryptocurrencies are indicating that potentially this sell-off, which we saw in equities, could carry on. So that's where we are. That's where we are. Okay. Let me see if there's anything. Guys, if you want me to cover anything or talk about anything, feel free. Just ask. I'll be more than happy to do so. Let's start with the first things first. I did tell you that I want to talk to you about FTSE. There is a setup which is potentially forming here. Now, this is FTSE 100 in 4-hourly time frame. We can see there is severe selling pressure. This red area here, that's my resistance. This is point of control at 71.86, and this is a support at 71.56. So if I show you this in a daily time frame, you can see that this 1, 2, 3, 4, 5 red candles are selling off, and they're coming to the cluster of these lows down here, and also these pin bars here, which were also tested in the past here and here as well. So although this appears to be quite bearish, it is possible that we could see an oversold bounce back. Now, a breakout above 72.20 and an end of day close above that level could open the way for a potential breakout higher. Alternatively, if we see a rejection here rejection at these levels and a loss of these lows at 71.85, that could trigger another corrective leg lower, and potentially extend this sell-off. So very interesting level from the swing point of view. From the trend point of view, we have high, lower high, lower high, lower high. So let me just show you why that might be of interest to you. So that's the existing trend. So if the price does go here and then starts selling off from around here, then that would be a trend continuation. Therefore, we're looking for a reversal here. This potentially appears to be a significant daily or weekly support. And if we see a breakout above that trend line, so something like this forming. So let me just be very, very clear and precise. Rally, 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 breakout, and then an end of day close above these clusters of the consolidation at 72.70, a daily close above that level, that could potentially open the way for a reversal and then another leg higher. So really FTSE is coming to a key level of interest from the trading setup. So counter trend traders are looking to buy this dip and look to take profit around this zone, 72.20 to 72.70. They're looking to put the stop loss below. Intraday traders are looking for an oversold rally and then a reversal to the downside. So something like this. They are looking for oversold rally and then a reversal to the downside. I would pay attention to what happens with the US markets today, because they will likely impact how the European markets might react as well. So for me, this low here at 71.85 is actually definitely of interest. I have no position in FTSE at the moment, but from the swing point of view, let's see if that level holds and we see a bounce from there. It could be a kind of speculative intraday entry. Let me just see if there is anything. No, no questions, which is all fine. I can see quite a few people are in the community as well. Avery, Enrique, Kay, Robert, Andrea, Dave, Diamond, Lee Buff, Jonathan, Mohammed, Mudassir, Rory, a few other people are coming in as well. So okay, cool. Guys, if you need something covered, let me know. I'll be more than happy to cover it. Now let's move on to some US equities, because they have been selling off quite a bit, and we're seeing this sell-off ahead of the open. So I'll start with I'll start with this one. This is S&P. That's a big one, and then we can move on to some of the others. So S&P, this appears to be a very significant level now. So we're seeing where we closed last week and the price is gapping lower. From the trend point of view, gaps tend to be filled. They tend to be filled, but if you see this severe selling pressure, when we saw the close, weekly close on Friday at the low, so basically the Friday closing was at the low, almost lowest level of the trading day. There was no oversold bounce back as such to reverse some of this sell-off. That normally indicates a further leg lower on Monday when the markets open. So markets are already gapping lower. They're much lower than when they closed on Friday. What tends to happen is when the markets open or just ahead of the open, you see this kind of oversold bounce back. Sometimes that bounce back manages to close the gap in this case that would be almost 100 points on S&P, which it's like 1,000 points on Dow, more or less. So it's a big move. It's a big move. But it might not happen. We could see a small oversold bounce back, an attempted oversold bounce back, and then another leg lower. So this pattern, for those of you who went through the price action course, actually basically it's a free course there. This appears to be as a continuation pattern, and what these patterns tend to do, they tend to do something like this. They tend to break to the downside, and then you have like a retest. So loss, retest, and then you see another leg lower. So that's one option. So basically bearish below these lows at 3,798, or call it 3,800. 3,800. The other alternative is if we see an oversold bounce back at the open, and then something like this, another leg lower. That's also a possibility, because there's quite a few people who are looking to short the market, and they've missed this because all of this happened overnight, because US traders were asleep when all of this was happening. Asian markets opened, the price gapped lower, Asian markets closed, European markets opened, and now we are consolidating here ahead of the US Open. So keep an eye on this. This appears to be quite bearish. So if I could find a really decent area to short S&P, I would like to short it up here at 38.95, which is the cluster of these lows and where we closed yesterday. Is it possible that the price can rally from here on no news? I've seen it happen. It is possible, but let's see what happens and how the markets open. We could see another wave of selling and a substantial leg lower, but this is where I would like to possibly go short. So what I might do is I might have a limit order there, but at the moment I'm just keeping it open. So 38.95. If I do that, I would likely have the stop up here at 39.20 or 25. So that's roughly about 20 to 30 point stop, with a view to take profits lower towards the cluster of these lows at 3,800. So it's 95 or 100 points lower for 25 or 30 points of risk. It gives me 4-to-1 or 3-to-1 risk to reward ratio, and that would be a good setup as well. So that's where I'm with S&P, but I have nothing open at the moment. Nothing open at the moment here. The other thing that I want to cover very quickly is Dow Jones before we move on to some currencies and then oil and gold. Dow Jones, very similar situation. We're seeing this severe selling pressure. This is where we closed on Friday. This is the gap lower. The price tends to do this. The price tends to rally to attempt to close the gap towards 31,400, and then creates another leg lower. Most of the people who are looking to do that, they would likely be looking to initiate shorts here. Some speculative counter trend traders are looking to buy the dip. We'll see how the markets open. If we get a little bit of buying there, it could be short-lived, but some speculative traders could be, scalpers could be looking to do that. And if that gives me the opportunity, I'll be happy to participate with that as well. But the disciplined traders, trend followers, they see this as a potentially another confirmation that we are heading into a recession, or we are in recession already, that inflation levels are quite high, that the central bank activity with hiking rates is not really doing anything to slow down the increase in prices, and therefore equity markets are selling off, and that's basically the existence of the new trend. So the level of interest for Dow Jones is at 31,400. So Dow 31,400. If I do go short around there, I would likely put my stop loss at 31,500 or 520, so about 100 to 120 points of stop. And the view would be that we will see oversold rally and a sell-off towards these lows at 30,800 or even 30,500. So fairly significant, almost up to 1,000 points of potential reward for the risk taken. That could give me almost 10 to 1 risk to reward ratio. Happy to do with that. Now the other version of this bearish scenario would be no oversold bounce back, loss of these lows down here, a little retest from underneath, and off we go lower. So let me just put this here. So these lows at 30,600 are hugely important. Flush lower at the open, loss of it, retest, and then another wave of selling would likely trigger a pullback towards 30,000, 29,800 to the downside. So both scenarios happen to be bearish, either a rally for a sell-off or loss, oversold bounce back, and a sell-off as well. But that's where we are with Dow Jones. Let me just readjust this too, and I'm going to leave it running here. So there's our 15-minute price. So from the scalper's point of view, we have the existence of the very similar setup here. This indicates the energy buildup, and there was one in Bitcoin that was posted in a community as well. This here appears to be coiling price action, and they have the tendency to break in the direction of the prevailing trend, which is in our case downtrend. So high, lower highs, energy buildup, and then if we see a dip lower, loss of these lows. We have about 8 minutes to US markets opening, so that second Bitcoin continues to tumble, now trading below okay, where are we now with Bitcoin 23,500, or 14% down, 14% down on the day. Some market analysts who are looking at Bitcoin, they are possibly this is going to be scary. I was looking at some analysis, and some of these guys with a longer term view, and they're quite bearish. They are looking for a Bitcoin to drop down to about $5,000. $5,000. And then you have other people who, you have a few interviews on Bloomberg TV and other financial media saying, oh no, don't worry, just stay calm, just buy more, it's fine. Brave move after this such a big sell-off here as well. Okay, cool. Let me just go and check if there is anything else going on. The other thing that we can talk about very briefly ahead of the US Open is gold. So gold had a severe pullback. We had an attempted breakout towards 1875, and now this is the reaction lower. Yet again, this is in response to that expected Fed rate hike and therefore US dollar strength. This was the point of control at 1853. I was, in all honesty, I was looking at gold as a falling wedge, and this was the resistance breakout.
Regarding the Northern Ireland Protocol, Irish PM says that unilateral breach of Northern Ireland Protocol is very serious. Adds that the only way to resolve issues is by substantive negotiations between UK and EU.
Yeah. I was looking at this as a falling wedge, as basically a breakout and a retest. And what I was looking for is I was looking for a breakout here, retest, and a push higher, which I would very likely trade on the long side, but it wasn't triggered. So that was my intention with gold setup. And now looking at this price action, I'm actually quite happy that I did not front run it from these lows, because now I would be stopped out. In best case scenario, I'll be stopped out with small loss, because I don't think I would have time to move the stop at break even, or even if I enter after this candle, I would have the stop down here. So I would probably be nursing a losing trade here, but I'm not in it. So if you remember from at the beginning of the session, I was telling you this is the current state of play. I have nothing open, I'm flat. Okay, cool. So that's where we are with gold. How far can the gold go? Now the next level of interest, we would need to reassess everything, is down here at 1825. So that's another level of support. And the resistance on the upside, well, this becomes resistance. The previous support now becomes resistance at 1854. Would I short gold? No, I don't want to short gold. I would likely be a dip buyer. If I see a big sell-off in equities, I would likely be buying gold because there's a hedge. But in the past, what happened is, especially with the FOMC week, you could see that you had a sell-off in gold, sell-off in oil, sell-off in cryptos like Bitcoin, sell-off in gold, but then a US dollar rallied. So US dollar was a safe haven. And that's where we are. So about 3 minutes, we have 3 minutes to US markets opening, and it does look like we could see a bit of a volatility today, and a big moves. This FTSE setup is still forming here. It's not doing anything, so it's not triggered. I would like to buy FTSE down here if I can, for another leg higher, or short up here with another leg lower. So really, if we talked about the existing trend and so on, so counter trend would be buying the dip with the view to take profit. The trend followers are looking to short below or short up here. But we covered all of that, so I'm gonna leave it alone. Is there anything else? Yes. Yeah. We just talked about that. It could be the indication of where we are. Okay, so let me just see if there is anything else worth talking about before. We have 1 minute. We have 1 minute to U.S. markets opening. I do want to talk about some currencies here, and I do want to talk about crude oil, but I'm afraid that I might start talking about it, and then the markets will open, and then what I'm looking at is this. Here we go. We are at the open now. So that's S&P. This is Nasdaq, and this is Dow Jones. US rate futures imply 30% chance of the Fed hiking rates by 75 basis points in June meeting. Okay. I don't know if this is that potential oversold bounce back. Let's see. Is there anything else that you guys are looking at? Hey Patrick, welcome back. Eladio. Gron Inverson, welcome back. Mike. Dan. Welcome, welcome, welcome. So 15 minutes. Let me just see where we're now. 15 minutes.
Geopolitics. NATO Stoltenberg says ongoing changes to terrorist laws and export rules welcome in a meeting in Turkey's concerns over NATO membership.
So far, it looks like it's early days. It's only 3 minutes at the open, but so far the premise for the S&P that we could see this oversold bounce back is possibly setting up. This is where we closed. This is the consolidation. These were the lows of the day on Friday or the week. Gap lower. It will be a big gap fill for S&P, almost 100 points higher. but so far this candle appears to be showing there is at least some buying interest down here. So either a counter trend traders or dip buyers, or maybe people who are counter trend traders. But what might happen is you have people who are shorting at these levels as well, and what they do is they would normally put their stops around here. So what might happen is that you could see a price shoot higher and then trigger those stops, and then the price is sucked up higher on a falling volume. Basically, as short sellers who get stopped out will be pushing the price higher, and then when they all get stopped out, a new wave of selling comes in and carries on. So that's also possible. That's also possible. But so far, just looking at this candle, there's a further selling pressure in gold, 1833. I did tell you that I want to talk to you about crude oil, so let me just do that very quickly. Crude oil is bullish in my book. Now this looks like an existing trend. This looks like existing trend. Key levels of interest for me are around 115, 116 area. What I would like to see, I would like to see a pullback to that level or that zone. It might not be a single level, it could be an area of almost 100 points. And then I would like to see a big reversal that looks like this. So these two candles here, or maybe these two candles here. So bullish engulfing, or maybe a candle that looks like a hammer like this with a big wick and a small body up here. So even wick below and a body. So then I would likely be looking to get on that trade. I'll see. Pullback and rally. I might have something on that even sooner if I see a breakout, if I see something like this, a breakout to the upside. So something like that could trigger my interest as well, and then potentially open the way towards up here 100 and, well, firstly 123 and then 126.90 or thereabout. But this does appear to be bullish. It's not there yet, but it's setting up. It's setting up for a potential trade. Okay. So we've covered quite a bit today. We've covered European index, we've covered gold, oil, we talked about US indices as well. A couple of things to talk about from the currencies point of view. Euro dollar appears to be quite bearish, big selling pressure here. This appears to be a point of control or a key trading level at 104.90. As long as the price stays below that level, bears appear to be in control. So this is what I was looking on Friday: sell off, a rally, and then another leg lower. So we got a sell off, we didn't get a rally just yet. We could see just a continuous selling pressure, but as long as the price stays below 104.90, bears are in control with a view to potentially extend this move lower towards 103.80, 104. This is all driven by that 75 basis point potential rate hike on Wednesday, and markets are pricing in that, so therefore we are seeing US dollar strength. The last thing that I want to talk to you about very quickly is cable. Cable also looks very bearish. This is energy buildup, this is a sell-off. The chart looks very similar to what we saw in some of the other markets, and in particular in Bitcoin. I would like to short cable at 122.90, 123, basically an oversold rally from here into this resistance I would likely put the stop above, maybe 50 or 100 points higher, with a view to potentially take profit down here towards 121, 120.70. So good risk to reward ratio, and this is all driven by potentially more bearish news from the Fed, more rate hikes, and their inability to control inflation. Okay, cool. Here we go. We've covered quite a bit. I will need to stop today's broadcast right now. And I'll be back with you tomorrow. I'll be back with you tomorrow at the same time. So thank you for watching. Thank you for listening. Stay safe and happy trading. Very quick summary. Reversal in S&P. Not even a 15-minute candle is able to form. This is a selling pressure here as well. The selling pressure in gold, and that FTSE is reversing as well. This is the resistance. Let's see what happens if the price bounces off this 71.85. Thank you for watching. Thank you for listening. Stay safe and happy trading. Bye for now.